All right, welcome back to another episode of the Black Bullion Show. The road to stagflation is being paved with gold, and I couldn't agree more. And before we get into why I agree, if you're new to this channel, please hit that big red subscribe button right down below. And also, please hit the like button. It helps to get this economic evangelism out there to the masses. So let us begin. So David Erfle wrote this article about stagflation, and this is on the heels of the updated CPI number that came out on Wednesday, June 10th. And here it is. Before it was pegged at 0.3% last month. Now it has lowered to 0.1%. So let's see what Erfle has to say to rebut this. And I quote, "These statistics do not represent necessities purchased by the average person, as the things people need have been going up while the economy has stagnated and the government continues to tell us there is no inflation. As the issue drags on, absolute necessities are getting more expensive while the things we can forgo have become cheaper. Things that we are still spending money on, like rent, food, alcohol, and video gaming, are going up in price. But things we are buying less of, like gasoline, clothing, transportation, and hotel rooms, are going down in price. In May, grocery prices rose 1% compared with April over the past 3 months. They've risen 4.1%, which is an annual rate of 17.5%. And beef prices alone are up 11% in just 3 months. When combined with both rental and ownership costs being up 2.6% in the past year, compared with a 0.9% drop in the prices of everything else, the U.S. has been experiencing stagflation for the past few months." Now, stagflation is a word you just don't throw around willy-nilly, but he makes a very valid point, and here is why. The GDP deflator. GDP deflator in the United States increased 113.49 points in the first quarter of 2020 from 113.04 points in the fourth quarter of 2019. And for those of you who aren't familiar with the GDP deflator, let me just read this really quick here. Here's a quick definition. The GDP deflator measures the change in prices of final goods and services, and it is considered a key indicator for inflationary pressures that provides insight into the future direction of monetary policy. Now, yes, this isn't quarter two yet, and I'm very curious to see where quarter two leads. But honestly, if I don't see a dramatic drop off, you got to start wondering, well, I wonder what's going on here between the GDP deflator and CPI. In fact, Peter Schiff, in his recent podcast, he was, saying that, the U.S. has been, printing money, but it hasn't been printing goods. He kind of puts this pretty nicely in that if the products haven't increased, but the money supply has, you have to distribute that increase in money over those same products and increase the price levels, no matter if velocity is lower. But let me know what you guys think in the comments section below. Is stagflation already here, or will it come shortly? I'll be hitting the grocery store very soon to let you know what I see there as far as prices are concerned. But thanks again for watching. Please hit the like button. Also subscribe if you're new. Thanks again. It's Black Bullion.